Get it done. Hey, welcome to the Closing Beat, everybody. Happy Monday. How we doing out there? Good? Did you have a good weekend? Hope all is good with you guys. Thanks for joining us here. This is the Closing Beat. We just talk about the stock market. We're financial advisors that are always here hanging out. And by the way, thanks to those of you that met us out at the Chateau Elan. Special thanks to Dr. Don. We got Mark and we got Hanson. Hanson, man. Cool little guy. Anyways, yeah, it was a good time. We'll be definitely doing that sooner than later, and we'll let you know ahead of time, right? We just kind of spur of the moment thing there, but appreciate you guys joining us there. If you look at the stock market today, a little bit of a carryover from Friday. Up 3. Well, here's how this kind of went down. Of course, I was curious when the futures market opened. I was like, okay, we got to see, where are we at? We're going to follow through. We're going to see some weakness. We pretty much immediately were up like 0.75%. And then throughout the night, late at night, we gave it all back. You wake up today, we're barely up. Then we start the day by going positive, then going negative, then this big rally off the bottom. You guys know now that that is October midterm year volatility. Volatility meaning the range that we move in the markets back and forth. Anytime somebody says volatility, just think of the range, plus or minus, whipping like crazy. We know that that is the highest ever in October of midterm years. So it's no surprise. If this were any other month and we didn't have any data to back this up, I'd be like, what? Like this market's going crazy here. But pretty cool. And I don't brag about performance. You guys notice how I don't talk about performance of our funds too much. When the market was going up, we were beating the market. On the way down, we're actually beating the market by not falling as much. And I enjoy that stuff. But for me, I just like it to be one of the benefits of us here at Jazz. I don't like it to be the core focus, although that's what we do. That's our fun thing there. We love to show that performance. And of course, every client can see that. But I don't brag publicly because it's like every client's different. Some of our retirees, they can't afford to move fast. And some of our young whippersnappers, they want as much performance as possible. So I love being able to do that there. Pretty cool. So far, we're really happy with this because we've had 30% in cash since last November. So that cash has not lost a dime other than inflation, to this market pullback. So I love being in that position. If you want to check us out, you can, of course, schedule a call on the website, send us an email or whatever. We have nothing to sell but ourselves, of course. And, worst case, maybe we work together. And, I guess absolutely worst case, you figure out that's true. They really don't have anything to sell. They just listen, give you a few tips there, and either we work together or we don't. But market-wise, if you haven't noticed, there's a definite change happening here. And remember, I showed this to you. We went back and we said the number of Fridays that end the week with a 1% or greater down day is almost about to break a record 15 times, right? You got to go way back to the financial crisis. You got to go back to even further to find other times where that's happened to this point year to date. Well, I want to show you this here because this definitely changed. Here's what we've been having this year. If we take the average performance of every single day leading up to last Friday, Wednesday is literally the definition of hump day, right? That's the hump of the peak. Monday's average decline 0.25%. Tuesday's about, let's call it 0.1%. Wednesday is the only day that averages a gain so far this year. Rather impressive. You get into the end of the year and the selling end of the week, and the selling picks up. Well, what did we see on Friday? The major inverse of that. If we go over to the charts here, here's Friday, right? Big reversal to break this really short-term downtrend here. And today was a lot of follow-through from that. So you got to recognize the changes in the market. I did a really cool, I thought it was cool. Notes from Jazz email this week. I'm going to see if I can show you because I don't like to just talk and not have stuff right here. So yeah, you can kind of see it. So first chart there, we were talking about the number of 52-week lows that were happening with the market hitting 52-week lows. So the market kept grinding lower, but the number of 52-week lows balanced out. And I pointed out some of that to you guys here on the show. Then I went further and I went sector by sector so that I could highlight which sectors were actually helping the market not make new 52-week lows. It was just kind of a fun way to show how to spot a bottom before everybody else guesses that it's a bottom, right? You can see that stuff developing. So if you're a client or research member, be sure to check that out. I had a good time making that one this weekend, and I love doing them every week. It's just a way to touch base with clients, let you know what's going on and what we're talking about out there in case you got busy. Now, this week, earnings season. This is like the bulk of what you can get for earnings season. This is the most important week of earnings season here. First, there's a ton of different S&P names reporting there. There's 300 in total. If you're curious, I thought of a different way to show this. This is the number of stocks reporting by day. 7 today, then we ramp up tomorrow, 40, 45, 61 as we get into the end of the week. And then the next week, well, you got the 28th in there. And then you got going into Halloween week, all of a sudden the second busiest week in the S&P. Now, what makes this interesting, you have 300 stocks in the S&P reporting, right? It's huge. Granted, it's like 30% of the total market cap of the S&P, but still, it's a lot of names reporting there. The MAGA stocks are the ones that will move the market. That's how they're referred to, like it or not. MAGA stocks would be Microsoft, Amazon, Google, and Apple, and they came up with that because they wanted to call it mega stocks, but it doesn't fit, right? It's not a name there. So we call them MAGA stocks, meaning there could be mega moves in the market. That's as sad as that is. That's the best they could do. And the reason for that is because those 4 stocks are the heaviest weighted stocks in the S&P. Remember, the S&P, I've said this numerous times, is the more your company is worth, the more say you have in the direction of the S&P. So you got Microsoft, Amazon, Apple, and Google. They're making up basically 20%, if you include the other class of shares for Alphabet. You got basically 20% of the entire weight of the market in 4 stocks. I should do it like I normally do. 4 stocks, right? So with that, we want to know when those 4 stocks report, how's the performance been going, right? Is it moved the markets? It absolutely has moved the markets there. When they all report in the same week, this is only the 9th time this has ever happened in history. When they all report in the same week, the S&P averages a loss of 1.12% for the week, right? That's not good, right? Granted, we've lowered the bar here, and all of this is hopefully going to help the markets move high. Hope these stocks move higher. But we average a 1.12% loss. Interestingly enough, for the NASDAQ, it's the same exact number. Average loss, 1.12%. The good news is, if we go look, let's go over here to Microsoft. So if we go look at Microsoft, their last earnings report there is going to be on July 29th. Oh, it's clear as day, right there, right? Big move, 6.69% for Microsoft. That obviously moved the markets, right? Go to Apple. Apple's going to be back on, where'd it go there? Apple's last earnings, also 729. There you go. Big move, right? There's the big gap on earnings, right? Alphabet, we'll just use the regular class of shares there. Huge move on earnings, 7.74%. And Amazon, you probably remember it, that was a massive move for Amazon. Their last earnings report up 10.3%. Now, we want that to happen again, right? If you want the markets to basically stick with this, leaning bullish momentum, then we certainly want that to continue. The bad news is, that doesn't normally happen. Microsoft loses 9%, 4%, 2%, gains 1%, and loses 0.1%. Apple has lost 4%, 1%, 5%, 1, 3, right? These are it's normally not a good thing, right? Obviously because of the average. Normally not a good thing when all of these guys report in the same week, but you should know that is coming up there, so something to look at. Anyways, going on to the S&P, obviously we're breaking the downtrend here. We love the way this is going. If you're looking for a bottom, you're a little bit nervous if you were hoping for lower lows. We know the NASDAQ obviously is doing something similar today. Performance for that up 100 points by the end of the day. If you look over at the Dow, you got almost 400 points on the Dow. It is rallying faster than the other indices, and the Russell is rallying the least out of all of them, the small cap stocks. Gold basically did nothing today. You wouldn't expect it to do anything. And oil was hovering around potentially a higher low. Still early to say that, but that's where it's hovering at the moment. One interesting thing is if you look at things like A-shares, sorry. The ticker symbol's ASHR. These are China large cap stocks, right? Anything China related. FXI is also popular if you're looking for more of an index play there. You could see the the horribleness of that today. K-Web is a popular one as well. These are Chinese oops, K-Web. Look at that. You go away and you forget how to type. K-Web. Oh, that's it. This is, officially the worst day ever for K-Web there. President Xi, over the last couple days, has worked to do some crafty things there, consolidate his power. They do things differently over there. And all of these things have now plummeted to lows. This is now going to be down close to 90% off of highs. That's a horrible one there. This is officially the worst day ever there. And remember, the reason I point this out is because remember that was one of my theories in the market. What would cause the markets to bounce? And we were saying X Brazil, in other words, push Brazil off to the side. Where else can you go in the world to invest and expect any decent returns? And like it or not, it was the U.S., the S&P. When you compare it to everywhere else in the world, there's just no other real better place at the moment to invest, even with this discount. And so one of my theories was that could be a support for the market, is the fact that people, they don't want to invest in China right now or Chinese internet stocks and things like that. Now, the Chinese, of course, they can't do that as easily, but people that invest around the world or in the emerging market stocks, whether you agree with China being an emerging market or not, they now can move money. What happened today, right? We get all this bad news overnight. We have a market that had a little follow through, right? I mean, it attempted to have some follow through, but was flat essentially when we started. What happens? Money comes in. Maybe, it's too early to tell, but maybe some of this money's coming in from people going, I'm done with this stuff. I'm going to go tax loss harvest over here on my China A shares and things. I'm going to go put some money to work in the U.S. That helps, right? So that was a long shot when we went back and talked about that, but I just wanted to point that one out in case that does continue. Okay, now, I promised you guys, I said, what study do you want to see? We went through either covered calls, efficient covered call strategies for stocks that you could use currently, or the highest yielding stocks that are beating the market. And you guys chose that in our poll. So I promised you that. I'm going to give it to you, and I have to do this a little different. That is incredibly small, is it not? So let's go like this, because I put them in order and I'll break it into pieces so we can make this bigger. That should be pretty legible for you. Yell at me if not, but here we go. What we have is the ticker symbol, the name of the stock, of course, the sector, and you'll find out why this is important in a second, the total yield, the volatility, remember the range, that wildness of the stock, and then I sorted the entire list by year-to-date returns. Now, what you're going to find is that because energy is the best performing sector so far this year, 62% gains, it is also the only positive sector for the year, ironically enough. You're going to find a lot of energy stocks, but there are a good mix of stocks in here. So we've got ExxonMobil up 78% for the year. This is, of course, before today. And yields 3.3%. That beats the returns of the market, negative 16 or 17%, right? So then they go in order. Naturally, the energy stocks have the biggest gains. Cardinal Healthcare is that breakout we were talking about. It did apparently finally break out. And also you'll notice healthcare in here quite a bit at the top. Kinder Morgan and where was the other one? I thought we had Gilead. There it is. Gilead there as well. Although it has a loss, you're down only 3.2%. Again, not including today for this. Some interesting names to me, consumer defensive names. These are your standouts. ConAgra, Kraft, which is a tough one, it's a tough one for future growth, but you're playing for the yield, 4.5%. And then Altria, I believe, has the highest out of that sector. It does, 8.2%. Now, in dark green, you can see like AT&T ranks at the top. It's obviously shaded darker green. Altria, One Oak, Kinder Morgan, and Williams Companies. Down here, you've got Dow. You can't quite see that. But this is the list from the top. We go all the way like this. We put you here so you can see the rest of it. These are the stocks. Now, again, this is before today, so you'd have to take out these bottom 5 names. Those wouldn't count. But one extra thing that I did for you guys, I said, let's just say you ran a scan and you said, at any given point, all I want to do is be invested in the top 30 stocks with the highest yield that are currently outperforming the market. Whether that means it lost less or it's gaining more, it doesn't matter. That's still counted as outperformance, right? I said, well, let's say you did that and you equally weighted them. In other words, you bought the same percentage of every single stock and you just occasionally rebalanced. What would happen there? So if we look where you'd be standing right now at the very bottom there is you'd have an average yield of 4.5%. Well, no, you would have a yield of 4.5%. Volatility that ranks below the top 10%, so that's good, lower volatility. And you'd have a gain of 1.2%. So you would not be down, although you would have positions that are down, of course, you would not be down as a whole. Your portfolio would be right at the flat line there, which after the year we've had, right, I think a lot of people would probably take that. If you could say, well, the markets are down, but I'll just take flat. That works for me if I can make a little bit. And the 1.2% does include the yield, right? So without that yield, you'd actually have a negative yielding portfolio. So hopefully that helps. Just a different way to look at it. You guys wanted to look at that. I hope you got a chance to take a look at some of the stocks there. They are in order by year-to-date return. And of course, you can make your decisions on your own because I'm not allowed to tell you what to buy or sell, but something interesting to check out. Also interesting, we know this because in our plaza here, the Pinellas County voting whatever school or whatever they do to teach people how to run the voting machines or whatever they do is right behind us here. So we've got early voting underway in a whole bunch of different states. That includes your early voting and mail-in voting there. There was an NBC poll that showed 70% of respondents ranked this midterms as either high on their interest level or very high. They ranked it either a 9 or a 10. So I don't really care how you vote or what happens, but 2018 it still holds the record as the highest turnout for midterm elections. I point this out because it's really important for the stock market. You now know, based on watching the show and everything, that the stock market likes a divided government. So, vote how you need to. We can be friends. I always say that there. You vote selfishly. Selfish voting is one of the more selfish things you can do, but it's fine in a good way. And I just find that interesting. This could be the highest turnout for a midterm elections. It's on pace to be anyways. And that's going to make this really, really interesting because, doesn't matter to me what happens, but if the stock market sees a divided government, it has the better performance out of any other scenario there. So pretty cool. Actually, just for fun, I look back. You got to go back to 1912 to find the second highest turnout before a midterm election. And some of the footnotes in that were women couldn't vote yet, and African Americans down here in the South, they couldn't vote yet. So the population that could turn out was actually much lower. So you got to go all the way back to that to find out a higher turnout. So maybe that's good. Maybe it's bad. I don't know. We're going to find out either way, so there's not much we can do about it. What we can do is move on to stocks in the news here because we do have some stocks in the news today. Not much. I'll give you that. Tesla did lower the price of their cars coming out of China. That initially hurt, but it looks like it had a decent recovery by the end of the day. It is overextended in the short term. So there are people that are saying, I like that sub 200 number. I like this extended pullback. I like the stock in this zone. And you obviously saw a lot of that today. That was a dead giveaway there. Taiwan Semiconductors is going to work to stop selling some of their chips. Stop making some of their semiconductor chips in China, thanks to the U.S. trade restrictions there that are in place and have been in place. This is not really new news. It's just new news that they have confirmed it. I have to put this one in here. What a better day to see this. Avis, which owns Budget and a couple others, up 16% on the day there. They're 16%. Jesus, okay. Upgraded by J.P. Morgan there. They had a lot of good things to say about it, but their belief was that the rental car prices were going to remain elevated because the demand is there. And I'll tell you, I can speak to demand because we went to the Atlanta airport this weekend and attempted to rent a car beforehand. There was almost nothing available, and it took almost an hour to get the car. This was from Budget. And I'll tell you, the price was astronomical. It was an empty parking lot. This is Atlanta airport, right? This is the busiest airport in the U.S. Vacant, right? I mean, like just an empty lot of cars. As they were coming in, they were hosing them down, kind of vacuuming them, and then shipping them right back out again. That's an awesome problem to have for the company. The consumers in the terminal there were not so happy, but Very, very cool. So I do believe JP Morgan has the right call on that one. Chipotle is up next. They're going to be reporting earnings. They're likely to beat on earnings, if you ask me. The expected move is 7%, plus or minus 7%. And that is, it's above the historical average. About 6% is the average move in Chipotle through earnings there. Now, I'll tell you, the focus is going to be on their guajillo steak. Do you go to Chipotle often? I have yet to try it. I don't think I will, to be honest. But did you know they track your tweets? So their food offerings, and this is a limited time offer, so the financial world would say LTO. If you're ever looking through transcripts and you see LTO, that it means it's a limited time offer. They do that with McDonald's and things like that as well. But they track your tweets, man. This is from Chipotle. So the garlic guajillo steak, they're looking at the trendingness of negative tweets versus positive tweets. I'm sorry, I said it backwards. Positive tweets versus negative tweets there. So it is trending positive. The dot, by the way, indicates whether the total is positive or negative, right? So we've got some positive, we've got some negative. We're just slightly positive. The chorizo, where's that? Over here. That was one of the better ones in terms of positive responses. I don't remember smoked brisket in there, to be honest. I did go through a phase where I did not go to Chipotle, but that one ranked more favorably. And so the garlic guajillo steak is likely not going to show that it's selling too well. Also, you can look a little bit further into their data. It's rather fascinating. The amount of engagement, the total tweets, they call that engagement. Cauliflower rice ranked as the highest there. Look at old guajillo steak. People were less interested. I will say, and I didn't include this on the screens here, the number of app downloads when that steak was announced hit a short-term high. Not the highest ever, but it hit a short-term high. So initially they thought that's favorable. But if you monitor social media engagement there, it's not looking great. It looks like that might have been a hit for a second and then it's out the door. But they are tracking you, just so you know. They track everything there. Yeah, right. Lastly, you got Coca-Cola. They're going to report earnings tomorrow as well. Remember Pepsi with the big earnings report, one of the best earnings reports for them ever in history. So if Coca-Cola can manage to put up even something like that, that could be good news for the stock. The stock is already responding based on that news. And of course, the indication of some lower prices for their input costs. Aluminum being one of those. That is a big one. Anyways, I'll take your questions if you have any, and then we'll wrap it up, get back to doing what we do. Oh, I tried to make that bigger for you. Yeah, all the China stocks, man. Rough day for them. Yep. You want a little more of a dip there? You got a limited U.S. dollars. Oh, I see what you're saying. Okay, Google or Amazon. I think you have to lean Amazon, but I wouldn't do anything before the earnings. That's me personally. I don't like to buy stocks right before earnings when in just a couple days I'm going to get to see the latest and greatest information that I could get. So I tend to just wait. The queso wasn't good. They did get rid of that pretty quick, huh? Yeah, ranks there kind of in the middle. Love it. You should try Rodijo. Oh. We don't have one around us, do we? I'll have to check that out. Yeah. Interesting. I'm all about it. You didn't tell us more about that spooky day 35 years ago. From Wednesday or last week, we talked about it. And the market's handled itself quite well. Dabriga's retiring next month. That's awesome. Cool. You know how many people have said, with the market, I'm not going to retire. Oh, I don't like that answer. You don't let the market dictate when you retire. You're going to live. You too. You're going to live through many more ups and downs. This is part of the initial plan's stress test, right? So anybody that's doing any planning with you, or you happen to be a client of ours, when we come up with something, we've already factored that in, that there can be pullbacks right away. There can be pullbacks a year from now, 5 days from now, and all that stuff. So don't let the market dictate what you're going to do. You let your dollars dictate it, right? If you don't have the money, that's a different story. I know. What do you think about China's GDP beat? Huh? You think that's real? You got some steel companies reporting this week. Forgot what we discussed about steel companies the other week. That's going to be a rough go for them. The moral of that story was potential weakness there. A lot of those are not expected to do well. Now, the bar's been lowered. That's the tricky point, right? If you want to take it from previous expectations, that's a tough one there. But even if they do beat that bar, that's still, that's a tough one. I don't think it's the time to assume that we're going to that's going to just shake it off somehow. I don't see that. Right. Orlando and Tampa. Do they? Where's it at in Tampa? I'll check it out. China's lockdowns, not locked. Yeah, I haven't followed that lately. I don't know where they stand on that. Yeah. Raytheon coming up with earnings there. Didn't see them on my list. I did have to abbreviate the list, though, because there's so many. You got Pulte Homes tomorrow, 3M, Coke, we already mentioned, General Motors. You can see all the names. Sherwin-Williams, a big one that people will pay attention to there. Valero, of course, in the energy space. Chipotle and Alphabet. Yep. Phillies versus the Astros, is that a thing? Cody, want to chime in on that? Oh, yeah. Oh. Yeah, I knew that. Phillies or Astros? You going Astros? All right. Cody's got the Astros. Yeah. You think we're in a recession already? I'm a bit torn for words on how we're defining these things with the latest, so I honestly don't know. I think we are going to have this labeled as a recession. Remember, markets go up in recessions, so we could call it a recession right now, and the markets could just be going higher. I think you're right about Sherwin-Williams. Now, I don't know so much of that happening in the entire quarter of last year, of their slowdown. I think you can see that start to bleed over into the final quarter, but we'll find out, right? And that is going to be tomorrow, of course, which we will be back to do this all over again with the goods. So I hope you guys enjoyed today. If we did, like, subscribe, follow, all the stuff I'm supposed to ask you for that I never do. And give us a call if you want to talk and see if we're a good fit or see if we can help in some way. You know where to find us. I wear it on my shirt every day. What else do you need from me? You know what I mean? All right, see you later. Adios.